Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Zoetis. The latest weekly report on test results for U.S. cases of the porcine epidemic diarrhea virus show positive test samples continue to fall from the late winter highs. Data for the week ending April 26th revealed 204 positive test cases in U.S. swine herds. This is down 35% from the high of 315 cases on February 22nd. The decline is evident across all segments of the hog industry, but the largest decline has come from suckling and nursery operations. Positive test samples in these operations reached a weekly high of 132 in mid-February and are now at 84. The case data provides a glimpse at the prevalence of the PEDv virus in U.S. swine operations. The challenge is the data only reflects the number and type of operations affected by the virus outbreak, not the number of hogs that have been lost. Despite the shortcomings, the weekly case report is the hog industry's best tool to forecast potential market hog losses due to the virus. Models based on the data suggest PEDv virus losses could reduce 2014 per capita pork supplies 4% compared to last year. That is based on an estimated 7 million head decline in market hogs, with some of the slaughter losses offset by a record large annual increase in carcass weight. Year over year, barrow and gilt slaughter declines began in March, quickly reaching shortfalls of as much as 167,000 head per week. However, weekly slaughter declines relative to last year have remained around 150,000 head, while the model expected weekly losses in May of more than 300,000. It's too early to tell if barrow and gilt slaughter declines will reach the levels many industry analysts expected by midsummer. July lean hog futures prices are still more than 30% higher than year-ago levels. That suggests market participants still anticipate larger summer slaughter declines. The next 60 days will be critical in understanding how the PEDv virus has influenced pork production and summer prices. CattleFax will continue to monitor the situation and update members on production shifts. The fed cattle market was not established at recording time in the North. Trade in the South has been collected at $146 per hundredweight, which is steady to $1 higher than last week. Feeder cattle prices were $1 lower to as much as $5 per hundredweight higher this week, and calf prices were even to $2 higher. Slaughter cows were mostly steady to $2 higher, and demand is good for all classes of calves and feeder cattle, especially as the supply of lighter weight cattle is becoming more limited. Boxed beef values trended steady to higher early in the week, but prices moved lower late in the week as sellers discounted prices to move inventory. Corn moved lower throughout the week as planting progress increased, which is somewhat typical for this time of year. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.